Let's look at 4 steps you can take in order to make $1,000 a month in dividends. Number 1. How big of a portfolio do you need? They say that the first step is always the hardest, but when it comes to making money, the first step is actually pretty easy. Figure out how much capital you need to invest. This may sound like a daunting task, but if you break it down into smaller steps, it's really not that difficult. For example, let's say you want to make $1,000 a month in dividends. Now, this totally depends on your return on investment, but let's just say that you're getting a 5% return. That means you would need to have a portfolio worth at least $240,000. This may seem like a lot of money, but if you invest wisely, it's actually quite achievable. Number 2. Find dividend-paying stocks. It's time to start looking for stocks that will pay you dividends each month. But where do you begin? For starters, you'll want to focus on companies that have a history of paying dividends consistently. Looking at a company's dividend yield can also be helpful in finding stocks that will provide you with a good return. Another thing to keep in mind is the company's payout ratio, which is the percentage of earnings paid out in dividends. A high payout ratio may mean that the dividend is not sustainable in the long run. However, if the company has a history of increasing its dividend, then it may be worth considering. Ultimately, there is no surefire formula for finding the perfect dividend stock. However, by doing your research and being mindful of these factors, you will be well on your way to generating passive income each month. Number 3. Start with large companies and ETFs. Generally, you can expect to earn more money from older, larger companies. Companies that are listed on the S&P 500 usually pay regular dividends and also tend to pay more per share. You can also start by investing in dividend-oriented exchange-traded funds, or ETFs. You can find many ETFs that are organized completely around investing in dividend-paying stocks. Often, it is easier to find one good ETF instead of picking stocks yourself. Before I move on to the last step, make sure you subscribe and click the bell. That way you'll be the first to see my next money-making video. Number 4. Reinvest your dividends. By reinvesting your dividends, you can quickly and easily turn a small investment into a large one. And the best part is that you don't have to put in any extra work. The money just keeps coming in month after month. With dividends, you can sit back and let your money work for you. And when you do this, you are able to compound your returns. That means that the more you reinvest, the more your money will grow. And over time, that can really add up. Additionally, reinvesting dividends can help you keep up with inflation. As prices go up, your reinvested dividends will give you a boost so that you don't fall behind. Click the video on the screen to see another money-making video.